What's up, YouTube? Listen, family, in today's video I want to share with you guys my 3-fund portfolio that I use on my journey to invest and build wealth in the stock market. If you are new to the stock market or new to investing, please consider these 3 ETFs on your journey. Okay, listen guys, I got a jam-packed video for you guys. Do me a favor, please make sure you like and subscribe. Help this video get at least 1,000 likes. And without further ado, let's go ahead and dive into it. Okay guys, number 1 in my 3-fund portfolio is SCHD, otherwise known as the Charles Schwab US Dividend Equity ETF, guys. An ETF is just another word for exchange traded fund. Okay, and so with that being said, you basically own a basket of stocks that are going to have similar makeups, and again, you don't have to then try to pick individual stocks and run the risk of one being up and the other one being down substantially. Nope, you just get a nice blend of the best, and that's why ETFs are also safe and they are also great and wise investments. Okay, and so inside of this one, guys, check this out. The sectors that make up this ETF are industrials at 17%, financial services at 16%, healthcare at 16.6%, consumer defensive at 12%, technology at 12%, consumer defensive, consumer cyclical down here at 9%, energy at 9.3%, basic materials, then you got communication services as well as utilities, guys. These are some of the best dividend paying companies in the market for those of you that's looking for that yield, or those of you that are looking for passive income on the journey. So you're investing in quality, you're investing in something safe, but then you're also getting that nice dividend every single quarter. Okay, and so please, on the journey, consider some of these. And some of the top 10 holdings inside here, check these stellar companies out, guys. You got AbbVie as number 1 as the biggest weighted holding. You got Amgen in here, you got Merck in here, you got Broadcom, Texas Instrument, Verizon, Home Depot, Chevron. Guys, you have some of what's called their dividend kings, your dividend aristocrats inside of this, which is why it is so beloved. Okay, it's what the makeup of this is that makes people want to invest in this, like myself, someone that's been owning this for a nice amount of time. Okay, but also guys, if you are a Vanguard holder, okay, like myself, you can do this same thing, but you can do it by way of VYM. Okay, write that ticker symbol down, VYM, if you are investing inside Vanguard, because this is relegated for like Robinhood, or if you have a Charles Schwab account. Okay, but if you have Vanguard like I do now, I have several accounts, but in Vanguard I have the same exact thing, but it's just VYM. Okay, and so again guys, SCHD, I kick it off with that one, guys, and I want you guys to consider it as well. Now look, number 2 is my number 1 holding in all of my portfolios, and that is VTI. Okay, the ticker symbol on this one is VTI, the Vanguard Total Stock Market ETF. Okay, and so again, since I started investing, and for anybody that's been with me since day 1 and since I came onto the scene, VTI has been my core holding. It is the foundation of my portfolios, all of them. Okay, so if you've seen my Webull, if you've seen my Vanguard, if you've seen Robinhood, if you've seen anything I have, you would see this is at the center of it all. Okay, and with that being said, the reason why is because you get the best of the best, and you get that diversification across it all. Okay, so let's go ahead and take a look at some of the holdings and the sectors inside of this as well. The sectors inside of this, guys, you got technology leading the way, healthcare, industrials, financial services, consumer cyclical, and industrials. Okay, and then you got the likes represented. Then the top 10 holdings, and this includes Apple at 6.3% of the weighting, Microsoft at 6.35% of the weighting. So those two being the biggest as well as the best of the best represented inside VTI. So therefore I don't have to go out and get this individually because I already own it inside of here. So for example, Microsoft is not a stock I buy as an individual stock because I own it by way of owning VTI inside of here. Does that make sense? And so I don't want to double dip. I don't want to cross pollinate these things. This also has Amazon in here, Nvidia in here, Alphabet in here, Meta, All of the Magnificent Seven, for examples, are inside of VTI, which again is one of the reasons why this is one of your best performing ETFs year in and year out. And then on the eventual down years it has, that's just a buying year that most investors swoop in to make sure they take part in the 10, 12, 14% years and run-ups that it has on the good years. Okay, so with that being said, guys, the number 3 is VUG, the Vanguard Growth ETF. Okay, and so this is how you get that growth. So look at this 3-fund portfolio. You got your dividend high yield, you have your foundational piece in VTI, and then you have that growth. You have that horse, you have those runners inside of this right here. So that AI stuff, you got the tech stuff, you got the cloud stuff, you got it all inside of here as well. And this is why this 3-fund portfolio is so powerful. And you just sit back and let this do the work, and your job simply becomes to dollar cost average every chance you get, either building one out at a time or sprinkling some of your money throughout all 3 at a time. Or you look at, for example, which ones of the 3 are at better buy zones, for example. Okay, now the market just last year was near all-time highs. Okay, we're still kind of at those levels. So again, your job will be to let this come down, let this correct a little bit. 10 to 15%, 20% would be ideal, and then you go to work. But all the while, you could be dollar cost averaging a set amount every time you get paid. Okay, but then when it gets low enough, say it's down 15 to 17%, 20%, then you want to make your bigger investments inside of one of these or all 3 of these, so that you can build it out and have it built up enough for when it run off. Okay, the top holdings inside of the VUG sectors are technology at 46%. That is why it runs. Okay, because tech runs the world, moves the world, and this one is heavily weighted with tech at 46%. The next one comes in at 16.5% of the weighting, which is consumer cyclical. Okay, so think about this: healthcare come in at 8, and then communication services come in at 13. Okay, some of the top 10 holdings in here also includes Apple, Microsoft, Amazon, Nvidia. Okay, but you got Eli Lilly in this one, you got Tesla in this one, you got Visa in this one. Okay, and so again, you get that growth. So you're getting a little bit of growth, but the overall diversification in VTI, you getting all growth, okay, inside of VUG. And then you get the value plays, the dividend plays, the plays with those juicy, nice PE ratios inside of that SCHD or that VYM, if you're able to get one of those, okay, depending on what brokerage you're using. Okay, and so guys, this is my 3-fund portfolio. This is where once we make the money with options, if I don't have an individual stock to park it, I'm always considering these first. And then after I look through these, then I deviate my attention to the next potential opportunities to place my money at to continue to grow my assets. Okay, and so on the journey, guys, this is what you want to have. Okay, let me know down in the comments below if you have SCHD, if you have VTI, or if you have VUG. Guys, there's also other ones like VIG. I also mentioned VYM. You got VOO. And so again, there's no right or wrong. It's about making sure that at least you have these 3, okay, or a variation of these 3, building your wealth on your journey. Okay, do me a favor, guys, if you appreciate this video, let me know down in the comments below. If you are new to investing, this is one of the best ways you can start. And what you want to do out the gate is begin to dollar cost average, or what is known as DCA. Okay, and when you dollar cost average, it just simply means you're putting a set amount each paycheck into one or all of these every time you get paid. Let me tell you this quick story before I get you guys up out of here. When I built my wealth and on the road to retiring young and early, okay, VTI, I told you that's my number 1 holding. What I used to do was $250 every 2 weeks. Okay, over the course of a 52-week year, I got 26 paychecks. That ensured that I got around that 6,000 mark in there, 6,500 on a good year, every single year in VTI because I was just dollar cost averaging. But on years when VTI pulled back, per se under $200, for example, okay, then I would take excess funds, so more than 250, so say 1,000, say 1,500, and then I would be buying it more low because the name of the game is to buy low and sell high. And so I will be buying VTI all through the year at work when I had a job before retirement, okay? But then on the years it would come down, or the time periods out the year that it might dip down or come below $200, then I would put $1,000 in there. Okay, I would put $1,500 in there. If I got a tax return, I would take $2,000 or $2,500 or $3,000 and throw it in the VTI just till I built it up, so that on the good years like we just had in 2023, when it runs up substantially, then guys, you're getting such a great return on your investment, okay? That is how you want to go about investing and building your wealth, doing it methodically and meticulously throughout the journey, okay? Dollar cost averaging every chance you get. And then once you get to a number you're comfortable with VTI, then you move to SCHD, or you move to VUG when tech cooled down a little bit, okay? That is how you want to go about this. Or if you just say, you know what, I don't have time for that, just find a comfortable number. It might be $50 in VTI, $50 in SCHD, $50 in VUG. And you just do that all the time for the next 10, 20, 30 years and let your money pile up like that as well, okay? But at some point you want to catch a dip, and on the dips is when you put in the bigger and the larger amounts. On the 52-week lows is where you put in the bigger and larger amounts. That's how you want to go about that, okay? Listen, guys, I hope today's video was helpful. I hope it added value to you, especially if you are new to investing and building wealth on your journey, okay? Please consider this 3-fund portfolio. It has the ability as well as the power to change your life as long as you stay committed to the process, okay? There are no shortcuts in this game of investing and building wealth. You must put in the work every day, every week, every month, and every year, okay? So with that being said, guys, listen, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.